We're looking at S&P 500 and futures. The time frame is 2000 tick chart, and right now the structure of the market is a bearish downtrend. And when I'm analyzing the downtrend, I need to make sure I analyze the strength of a downtrend properly. So how strong is this downtrend? The downtrend is fairly strong. Why? Because notice from the very top, we moved quite a bit down. We haven't confirmed the EMA once, and the bullish pullbacks are minimal. So this is already indicating quite a strong bearish downtrend. For this reason, I'm not looking for a reversal just yet. Now, I don't really want to sell directly into these lows. I want to see some significant pullback. I want to take a high probability setup, but still my bias remains bearish. Even though we have a break new extreme, I still expect for prices to eventually, after correction, continue working lower. All right, traders. So the bullish correction keeps working higher. You can see I'm going to make sure I analyze the trend because there are always trends working. So right now, the downtrend had a break, 2 legs to new extreme, reversal. The correction is about to play out, but I'm still expecting for prices after this correction is over to keep continuing trading down because we started with significantly strong downtrend that should get some follow through. So this is what I'm doing. I'm just relying on the pure price action, reading the candle bar by bar. We see that the prices keep pushing lower slowly but surely. We ended up consolidating for a bit, which means I can't really force any entry in this mess right now. So I'm just sitting on my hands patiently. All right, I thought I was recording, but I didn't. I attempted to take this high low because we had a failed breakout. Prices attempting to go down, but they pushed back into a trend range, which means the trend range is now holding. So I have to adapt to a trend range structure, but this high low formed quite quick. Such a strong decisive bar above EMA and above the support now. You had to react really quick. I wasn't that quick enough, but it was a nice high-low confirmation of this failed breakout. And you could have treated it also as a new high, first entry long, pullback, second entry long. At this point, the support is clearly holding. Prices didn't manage to go back down. They pushed back above EMA and confirmed the trend range structure. So at this point, once you're back above the EMA and above this support, I need to switch to trend range rules overall. The market created larger two-legged pullback. We have first leg, consolidation, correction phase, second leg. Even this larger uptrend just now has a break new extreme. We already had a fair breakout here, which most breakouts will fail. You never want to be buying the breakout. You want to wait for the breakout pullback. If you want to buy, you can see you broke, you came back, tested the breakout area, and market continue working higher. Now, I can't really sell anything just yet because it's too bullish. This uptrend was in play. Nothing pushed below EMA just yet. So everything is right now creeping still above EMA. I don't really want to sell, but at the same time, I can't really go long just yet. This was a second entry long, new high, first entry long, second entry long, two-legged pullback. But notice how large this was. It closed very close to these highs. It was very big. So you don't have that much room to scalp out until you reach new extreme. You can see you barely managed to get out, but you don't know that every single time. We have news announcement, which you can see can result into big volatility spike. This is why you don't want to be trading right around the news. So you can see my previous analysis was completely negated because the news are kicking in and they're completely making a quick volatile spike. So I'm just going to let this news play out for a while and let's see what's going to happen next and what pattern the price action is going to offer me next. Alright, traders, I'm going to resume the video as I'm going to take a high-low confirmation setup of the EMA and of this double trap, but we didn't get filled here, unfortunately. So I have to cancel my limit order. As you can see, after the news came out, it confirmed the EMA one more time with significant bullish momentum, which is giving me information from the market that the bullish momentum is more prevalent. A brand new uptrend is starting. So I can see that the EMA kept holding. So this allowed me to view this as a spike and a channel pattern because I can see multiple confirmations of the EMA, which allows me to draw a spike and a channel. We had first leg down, pullback, second leg down. We had a double trap set up because the second entry long was horrible doji bearish, but it was still quite congested. But notice it is at the EMA, the small support is holding. And what I like entering was the push above EMA, another confirmation of the EMA, of the small support, and a strong bullish reversal up. So this high low confirmed the double trap. The spike and a channel needs to get new extreme. EMA kept holding, so I'm getting the confirmation from the market that the market remains bullish. Notice the downtrend has a break new extreme, indicated that bearish momentum played out. Larger two-legged pullback indicated that the bearish momentum played out. And if you see strong push above EMA, this is the confirmation that the market will push higher. So the context is finally getting a little bit clear. It was unclear here as we were consolidating with stronger bullish momentum, but we unfortunately missed it again because the market is very fast now. Since I see exponential moving average holding multiple times, we keep creating higher highs and higher lows so consistently. we have another confirmation of the trend line and of the EMA. Unfortunately, these are matching highs. This is double top, which means I have to reset the count. So this is just a first entry long. Now you can see it looks like it may work. If this was legit second entry long, new high, first entry long, pullback, second entry long, I would have not hesitating taking a long here because it is right at the key entry point, right at the EMA in bullish uptrend. It looks like visual two-legged pullback, first leg down, second leg down, but I reset the count when I see micro matching highs or matching double bottoms. From a balance of probabilities, it will save you from taking a losing trade. In this case, we can see that the trend up is so strong, EMA keeps holding so many times that it probably was worthy to taking a chance here. But this is how I'm basically reading the price action, just following the bias, waiting for the two-legged correction to the key entry point. And right now we can still get a high low or failed second entry short confirmation setups. All right, traders, I'm resuming the video as I'm going to take this second entry long and we got filled. So I'm going to place my stop loss one tick below the single bar. I'm going to go for 8 tick target profit. The stop loss is very small, so I'm risking this setup even though it's getting a little bit wedgy. But it is a second entry long of 2 key entry points. We only need 8 ticks and we managed to scalp out. So I'm going to move my stop loss to break even because anything we made right now is just a bonus. And you can see this is the goal that I'm looking for. Hold on, let me see. I'm just gonna do, actually I'm gonna decide how I'm gonna play it. I would like to see some nice runner here, of course. Come on, keep pushing higher. If we get around this trend channel line, then I will tighten this really tight. But everything basically remained the same. The bias is clearly bullish. High highs, high lows. My goal as a price action trader is to identify key entry point, which we clearly have confirmed, spike and a channel. EMA is helping you to understand what's going on here. So you can see multiple rejections of the exponential moving average. This is indicating that the prices keep pushing higher, the bullish momentum is stronger. And I'm just waiting for the two-legged correction, even smaller two-legged correction here. And this was a micro double top resets the count. First entry long, pullback, second entry long of 2 key entry points. The more key entry points you have in price action, the better. The EMA and the trend line holding congruently. So we have 2 key entry points in a bullish structure, and I don't need any fancy indicators or none of that stuff. So it's a shame we missed this setup or this setup. We would have already been done for the day. And this was a really gimme because now you can see EMA holdings for such a long time. Downtrend has a break new low. And if a double trap works and EMA keeps holding, this is a really easy trade, but the momentum was so strong there. I'm going to tighten it even more. Come on, let's get some nice runner here. I was quite surprised at the very beginning because we had a first leg. I was not expecting for prices to keep pushing higher. I was expecting bearish continuation, but you can see there was a failed breakout that managed to push back into the trend range, and everything changed from this point on. Once the support held and a strong higher low was confirmed, this is where basically the bullish momentum started. You just have to adapt to the market you see, not the market you want. I can see that just we never managed to break below EMA. And especially after news, another strong bullish spike. So this changed everything. We switched to full-on bullish channel. I had to adapt and we had a spike on the channel working hard. So we managed to get at least something out of this runner. The uptrend has a break. So according to rules, we expect for prices to create new extreme. However, right now the downtrend is in play. We have a correction, so we can make the second leg down to a new extreme. But either way, I'm still expecting a new high eventually for this uptrend. So I'm looking for a push above EMA and a failed second entry short. Resuming the video, as we just had the failed second entry short we expected because it's the lowest low. First attempt by the sellers to create new low. Prices pull back, and here was the second attempt. This is the second entry short to create new extreme. But if the momentum in the market is so strong, the bulls are in control. They may not create new low, and notice indication tick lower and instant bullish reversal back above the EMA tier 1 bullish signal bar. Now this is a great failed second entry short, closing above EMA, expecting new high for the uptrend, everything according to rules, high probability setup, but there was no tick back. I had to use my limit order a couple ticks back. No way I'm going to chase it when the bar is this big. You can see there was a little gap, prices never even managed to tick back, so you had to use stop order here, which your risk is quite big. But the great setup context wise, failed second entry short, you expect new extreme. And this is why we look for failed second entry short, because this was the second attempt to create new low for the downtrend. And then you know it is safe to go long once all the sellers are trapped. Market keeps correcting. There was additional larger two-legged pullback. We managed to create new low for either this downtrend or this downtrend. We're going sideways. I need to identify the trend range. We still need to get new extreme for this uptrend going to trend line rule. So I'm expecting high low, but this high low is bad, doji below EMA. So right now I'm waiting for felt second entry short if it forms good above exponential moving average, because we still need to get new high. We traded up into this consolidation. Everything right now is still bullish. Larger two-legged pullback and new low are indicating that the bearish correction is over. All right, so prices managed to create a failed breakout out of this trend range. We're pushing strongly above EMA, so I'm expecting, same thing I was expecting here, the bearish correction was just a little bit longer, a failed second entry short. This is a failed breakout out of the trend range. We have overall bullish bias, up Chinese new high, decisive momentum above EMA, confirming bullish bias. I'm looking for failed second entry short. Hopefully it forms near the exponential moving average so we don't have to chase it too much. Price action stalled for a bit. We had the trend range with a bullish tilt. I'm still leaning more bullish, but every single time price is pushed above EMA, they instantly reverse back down, so I couldn't really buy. We're back above EMA now again, but we have cleared two separate legs. So I want to reset the count here at these matching lows and look for brand new second entry short failure or second entry long. Not a bad setup overall because we expect new high, but let's hope we get some decent confirmation as well. We have a two-legged pullback second entry long, and I was even willing to take a setup if EMA didn't hold, but it needed to close quite strong. You can see we closed below exponential moving average. This up Chinese new high, this up Chinese new high. It is a two-legged pullback second entry long. I was really even considering a more aggressive setup, wait for high-low confirmation setup, hope it will form because this is a two-legged pullback that I was expecting. I was once again even willing to go long on an inside bar or here if we push below EMA, but I wanted to see at least close above EMA, not like this. But unfortunately you can see the market corrected a little bit deeper, and now it looks like I may have missed quite a simple setup. Perhaps we will get even a decent high low soon. Right after market open, we had a larger two-legged pullback, and after the two-legged pullback, the market didn't correct. Exponential moving average kept holding prices, and you would see continuous bullish momentum. News created a very strong bullish spike, and after you see so many confirmations, this is where the bullish trend will start, the bullish structure will kick in, and you have to identify a pattern. So we had a first spike, and then we went into a little bit flatter formation, the spike and a channel pattern. And after you have a bullish structure, bullish spike and a channel, the goal is just to wait for a high probability setup, which will be at the end of a correction phase. And how do we identify the end of a correction phase? Well, after the two-legged pullback, and especially if there's a break and a new low for the downtrend. And we can see here, first leg pullback, second leg, first leg pullback, second leg. This is where the correction phase will end. And at the key entry point, the push phase will begin, and you want to buy low. So as a price action trader, you're training your eyes to count for two-legged pullbacks. Here we had double trap, confirmation setup, high, low, EMA kept holding, and this was an easy second entry long. As the bullish trend is in play, the price action rules dictate that after a break, we're not expecting a reversal, but instead the new high to be tested. Strong push above EMA is indicating to you that the bullish momentum is resuming, and there was a nice failed second entry short. Trap of the sellers looking to create new low for the downtrend. Bullish sign, they were going to create most likely a new high. In this instance, it stalled a little bit. As you can see, range-like structure, it's not uncommon for the correction to be a little bit stronger. That doesn't deter you from keeping your eyes on the main goal, which the main bias was basically from the very open bullish. So just because you see a little bit stronger correction, that doesn't mean you start instantly looking for broader channels like this or possibly like this. The main bias for the day was bullish. This channel needs to get new high 80 or 90% of the time. It will reach new high. So I'm just looking at it as a two-legged pullback. You can see price is stalling here. Don't get trapped into shorts. Just wait until market will push above EMA, and you can see breakout pullback of the consolidation, and the brand new small uptrend is starting because we need to get new high even for this channel. Two-legged pullback once again indicated end of a correction phase. Break at a new extreme, and then high-low confirmation setup of the second entry long of the EMA as well. And you can see if you connect the first two swings at the bottom, the second entry long confirmed it, and we even have wider channel in play, followed by a break new extreme, but market was not reversing and instead continued working higher. So after we see break new high and market continuing working higher, there is a brand new larger pattern in play that looks something like this. I can have a little break here because the goal is to make it fit around here. Just gonna copy it, put it at the top, and we have broader uptrend working to the upside. Now, if you're a very astute student, you already can remember that we talked about a very similar structure not too long ago. In fact, 2 days ago, our last video, we had almost identical market. In front of us, we have a chart of the ES 2000 tick chart from January 11th. And this is a great reminder. The price action really repeats over and over again. It depicts human psychology. And this is why we spend so many times after the fact studying the chart, trying to understand how market moves. Because if you understand this, you'll be able to use it in the future. And this structure formed almost identical context-wise to what we traded today. It wasn't as strong, but notice we ended up having a spike in a channel. This was 2 days ago. Then we had to break it and a new low for the downtrend, and we expected new high, just like we expected today. And there was a second entry short failure. Here was higher low above EMA and another failed second entry short above EMA. All great setups worthy of a scalp. We expect new extreme, and just like today, there was a little bit longer, stronger bearish correction. But that doesn't mean we're going to instantly looking for reversing the market and for this wider pattern. No, these are two separate legs. Daily bias was bullish, and I'm just working with the price action, and you can see fell breakout, eventually pushed strongly above EMA, heading for the new extreme. And as we saw prices continuing working higher, there's even a chance for us to extend the channel because there was no single close below EMA. Market, however, continued working higher. The bullish momentum continued. So what does it mean? There's a bigger pattern in play, and I'm gonna find overall broader, bigger channel. This is today's structure. You can see almost identical. Spike and a channel on the left. We expect new high, couple great setups. Longer two-legged pullback. We're not extending the channels, making them wider. It's gonna take time for bears to deplete. Here are all the sellers getting trapped, and eventually market needs to get new high. And just like 2 days ago, there's even a brand new wider channel. Bullish momentum keeps working, so we even find the bigger channel. So absolutely amazing how price action can repeat sometimes over and over again. And it just goes to show that you can develop a gut feeling with time. You just will know what the market will do. You don't know why, but it's because you've seen this happen so many times. And if you just follow the rules, the price action sometimes work really like clockwork. I'm going to talk to you next time, and good luck with your trading.